Hello, my name is Mark Brennan. I'm the CEO and co-chairman and founder of Cerrado Gold. Cerrado Gold is an emerging mid-tier producer. We have currently two assets, which we believe are world-class assets in prolific gold districts. The first asset that we have is in Argentina, producing approximately 50,000 ounces a year at an all-in sustaining cost of about $1,100 today. And we have a very interesting development project in Brazil, in Tocantins State, called Monte de Carmo, which we recently published an updated PEA, and that PEA suggests an NPV of about $617 million with an IRR after tax of 94%. Most importantly, it shows that we have the potential in Brazil to produce 150,000 ounces for the first 5 years of my life at an average cost of $431 US, which would make our company and this asset the lowest cost production asset in the world for gold. So that's a brief introduction to Cerrado Gold.
Well, welcome back, Mark. I haven't seen you since November, pre-IPO. If I remember correctly, you were going to try and get that thing done for Christmas. Didn't quite work out, though.
No, you know what? We started that process in October, and we kind of came down the last shoots of the big jump in the gold market. And so we were unsuccessful in terms of doing our initial IPO in October and November. But then we successfully completed it in February, where basically on February 25th, we started trading on the TSX Venture Exchange. So we've been a listed company for just less than 6 months.
It's always interesting, isn't it, with these things? I mean, you've been around the block, created a bit of wealth elsewhere. Constant case of learning, constant case of reacting to the markets. I mean, do you feel you were getting the best advice from your bankers at that time in November?
I do. You know what? I think in terms of it was interesting. One of my, we had great promises, and as you may or may not recall, in September, October, there was a huge plethora of listings and offerings at much higher valuations on a relative basis than what we were looking for. And I don't think we had a lack of interest due to the fact of with regard to the actually gold market itself. But the day we actually looked to be listed was actually the day that Moderna was approved, the vaccine was approved. And gold prices fell actually $200 on that day. And subsequent to that, I learned that there were 400 companies that had, during the period of the window from August to October, had actually we're filing their clearance prospectuses. So there was a lot of money raised. We probably missed it by about a week.
Yeah, I think that's probably about right. And I think this year's been interesting as well. A lot of moments like that, but for different reasons. Right. So once I just want to kind of focus in on this one because I'm always intrigued about. If you time it right, it's awesome. If you kind of get it off by a week, you're starting on the back foot. And you've got to recover, and you have. So I think it's not a bad conversation to have. You went out of the gate, share price dropped, people dumping stock into the market. Are you happy with the way that you structured the deal for the IPO?
I think I am. And remember, we did a round in August at 80 cents US. That basically was we raised $7 million at that time, and that just preceded we were looking for 25 million at $2 Canadian, so about $1.40 US. And so I think in terms of, we ultimately in February raised $15 million at 135. As you mentioned, the stock traded down quite a bit, down to about 95 cents, $1 Canadian, prior to its reversal. But I'd say that we were private for 3 years. We had shareholders who initially invested in late 2017 at 20 cents US. At the time, we were trading at 5 times their money, and it was only a natural event. And I fully would subscribe to it that if I was sitting on a private investment for 3 years and I'd made 5 times my money, I probably would have taken some money off the table as well. We have been very fortunate in certain respects that we've seen probably about 17 million shares of Cerrado turnover over the course of the last 6 months, which is, I think, a very positive thing. Bring in new blood, bring in new shareholders. As you know, management owns 35 to 40% of the shares. We're restricted from selling to a large extent. We're firm believers, so management has not been selling. So I think we just had some shareholders who were long-term holders, and they took some profit off the table, which frankly is what the markets are for.
Right, but you said to me the management had probably put in about $3 million. So you're getting in with the cheap stuff. You're holding a big block of this. Have you followed your money? Did you do that at the IPO?
Yeah. Listen, I think in terms of management owns 35 to 40% of the shares. Basically, I'd say that the cheapest, most management, aside from later compensation, most of management got in at 20 cents. They got in at 40. They got in at 50. So we followed in. I mean, there's a limitation as to how much and management can put in, but we have a very good holding now. We're it's spread between 24, 25 people. So from that perspective, it's not one or two people just sitting on a big clump. It's very material to most people's lives what their holdings in Cerrado are. And I think we're very strongly aligned with shareholder interests.
Well, yeah, I mean, you're holding on. You understand what you're trying to create here. So maybe we better get on and talk about that one. Okay, two assets. You talked about, obviously, Don Nicolas down in Argentina and Monte Carmo in Brazil. Brazil's the one that you think is the big game changer for you. So do you mind if we just kind of get Argentina out of the way? It's a producer, so perhaps that's a bit rude to position it like that, but it's 50,000 ounces, not too shabby. You mentioned you had hopes of getting that up to 70, 80, and maybe even up to 100,000 ounces. So just remind people what you've got there.
Sure. The investment thesis, we acquired Minera Don Nicolas in March of 2020. And our thesis for going in there is that we would have 8 to 9 years of production at 50,000 ounces on a base case where we'd have a cost of about $1,000. And so at $1,800 gold, that would generate $30 to $35 million a year. We still think that thesis is legitimate and is ex-COVID. We've been restricted a little bit. We hurt a little bit by COVID, but not materially. We've actually been able to bring that in. We are looking at a heap leach opportunity that we'll announce our progress on that, which will probably be another 25,000 ounces that we'll look to bring in probably in the first or second quarter of next year. So we should have by the run rate of the end of this year, we should be north of 75,000 ounces on a run rate by the end of the first quarter, early in the second quarter, which will generate about $50 million of free cash a year, which is very healthy. So from that perspective, we'll look to grow that. Now, there are restrictions bringing money out of Argentina that are very costly. You can do it, but it'll cost you 40, 50% of your money. So we're not inclined to be doing that right now. We just want to grow Argentina as its own standalone unit. But as you mentioned, so that'll be our focus with Argentina, grow that as a standalone, self-contained bubble, funding itself, growing. We have a humongous land position of 330,000 hectares, lots of exploration potential, lots of growth potential. But I think if you look at that as for now, 180 to 100,000 ounces a year, pretty healthy. Where we see the tremendous growth in value in the short term is going to be coming out of Brazil.
I get that, but Mark, I just want I want to be able to park Argentina completely and properly and feel like I've asked you the right questions. Okay, so when we last spoke, you talked about 1650 gold, 25 million free cash flow. You just said to me, a big number, $50 million free cash flow, but it's hard to get money out without punitive charges from Argentina. Argentina, there's the exchange rate, then there's a blue market, there's also a black market in terms of how you extract your cash from countries. So have you got a plan for that? I mean, you can't just keep plowing your money back into the ground. There's no benefit to your shareholders. So what do you do?
Well, I mean, I look at, I'll just maybe look at, the currency controls were imposed in September of 2019. I don't think they're there indefinitely. If I look at, for example, at what happened to the west of us, when Goldcorp bought Cerro Negro, they paid $4 billion for Cerro Negro. That asset now produces around 350,000 ounces a year. It's a good asset, but I'd say to you that I think that there's a strong value proposition to grow Argentina, to make it into 100, 200, 300,000 ounce producer. Because there will be a lot of, particularly as it's generating its own cash. So from that perspective, we will continue to be plowing money back into Argentina. The heap leach operation will be funded to a large extent by our own cash flows. We'll be looking at most projects in the belt. They went from an open pit operation to underground. We haven't even started going underground yet. We're still open pit, and so we'll be looking at going underground. So we have lots of it's a very prolific belt, very strong endowment of gold. We think we're going to be able to expand our million-ounce global resource we have right now substantially, and at surface for open pit, but also underground. So we will continue to grow that avenue. But I'll say to you, Argentina is not an easy place to work. It's not the most favorable jurisdiction in the world. I hope it'll get better, but we'll make do for now.
Okay, but answer the question about how your shareholders benefit from you stockpiling cash in Argentina, hopefully at some point, because you're going to plow money back in the ground and grow this thing. But if the money keeps going back in the ground, I probably want to be one of your service contractors, not a shareholder. So tell your investors how they benefit in the long run. Do you have to eventually take a hit for the team and say, okay, we'll take the 40% hit on this, and then have to get, because that'll be presumably after tax number as well, right? So
no, I understand, but at the same point, to your point, I mean, I think in terms of, first of all, we haven't started generating that cash to date, right? And so so we will look at options of how we can get cash out of there, and we know the options and we know what's involved there, but it is quite expensive. So in terms of, but as long as we can see the capability and the possibility to grow, there's still a lot of attraction by large mining companies coming into Argentina. You saw South 32 came in the fall. There's a major that is fairly widely known is coming into not only Argentina, but wants to come into Santa Cruz. How are they going to do that? Who would be the best person for them to talk to? I don't know the answer to those questions, but I know that they're looking to come into town. So building a very strong asset base. Remember, where we are is in Santa Cruz. We're in the Deseado Massif. This is a very classic epithermal system, very similar to what you have in Nevada. But what you don't have similar to Nevada is you've got a lot less exploration, and you still have a significant gold endowment. So the reality here is that as these major companies are producing their gold, their reserves are dwindling, and we all know that they need to replace their reserves. How they do that, where they do that, I'm not going to talk about the merits of that, but I think this belt is somewhere that major majors are starting to come to. And from that perspective, I think we could line up by putting money into the ground. We could line up a very attractive opportunity for some major company to come in.
Right, but now we're getting to it. That's the business plan. Your business plan may not necessarily be, let's get this thing into $50 million a year free cash rate. Let's make it attractive enough for someone to say, we've done the hard work, buy us, and pay the money back into Canada. Problem solved for you. Is that what you're saying?
We take their shares.
You take their shares. Okay, they're that good. Okay. Now, that's the point I wanted to get to. I wanted you to explain to people is like, how do you solve that problem?
Yeah, no, that listen, and very candidly, we've been approached by people already, by some significant companies already. The reality is that we need a year. We need a year before we start getting to a point where it's attractive enough to shareholders. But again, I think that the situation with Argentina is such that they need to export commodities to bring in dollars. And the reality is that these cost controls, in my view, currency controls, will not be in place forever. So I think at some point we will be able to export those dollars.
But that's not a strategy you're in control of. What you perhaps can affect more control over is making yourself attractive enough for a suitor to come in and take you guys out, get the cash that way, right?
Agreed.
It's quicker.
Agreed. Yeah.
Potentially. Yeah. Okay, fine. Let's park that up. We understand what you're doing there now. So let's talk about your flagship. You talk about the thing that you're most excited about, because I tell you what caught my ear. $431 ASIC. I've never heard a number that low.
I haven't. If we look at, as I mentioned, if we look at the S&P Capital IQ, which is their database, this would put us as the lowest cost producing mine in the world. And this would be at this level, would be about 5 years at 150,000 ounces a year. So that's actually a pretty sustainable, that's a pretty significant amount of ounces, not just a notional amount of ounces. But the important thing to note about Brazil, just like Argentina, is that we've had this project for 3 years, 3.5 years. We've taken it from 0 ounces up to 1.3 million ounces. Remember the thesis we discussed, a year ago, or almost a year ago, 9 months ago, was that we believe that there's potential here for 5 million ounces in our district that we control. So again, many people and many companies have successfully drilled only for the ounces and not looked at the development side. For us, cash flow is king, and we want to get to a cash flow situation which we can drive our operations from as quickly as possible. But I'd say to you that we're also running a parallel exploration program, and from that perspective, we do have a lot of confidence that we can grow this resource substantially. So on a development side, we've got an asset which has an after-tax NPV of 617 million today, with an IRR of after-tax IRR of 94% that I've never heard of numbers so high. But that's just because we've got a tremendous property with tremendous resource.
Right, but your challenge now, obviously, saw the press release came out. It was great. Yeah, IRR is 94.8%, lovely, 617 million NPV 5. Great. 2 things. One, scale. You got to get up to that 5 million ounce, right? You've also got to move a heck of a lot of inferred into the M&I category now to kind of get to a number which kind of I think the market will react better to. So how do you go about doing that? Well,
I'll say the interesting thing is that in this new resource, we kind of hit the lower level of the range that we targeted for the resource very candidly, and the fact is that we came in. I was hoping for someone to target about 1.5 million ounces. We came in at 1.3, but what was very positive and what we hadn't been in all categories. We were looking for 1.5 million inferred. Actually, I was looking for inferred. And we ended up with 1.3 million ounces, of which 550,000 ounces were in the indicated category, and the balance were in the inferred category. So the reality is that for the purposes of our PEA, that indicated resource, one, provided credibility that we have upgraded resources, but two, most importantly, as it showed that we could upgrade the resource fairly comfortably and fairly easily. And so to your point, we have 550,000 ounces right now in the mine plan according to the PEA, or about 47% of the resource is in the indicated category. We believe that getting the additional 53% of the resource into the indicated category should be pretty straightforward. Again, it's at surface. We go down to a maximum depth of about 300 meters. So that's something that we should be able to we're just working on the infill program right now. But I would expect that we will probably complete that by the end of the year.
Okay.
Complete the drilling.
Complete the drilling to inform how much of M&I you've got, of indicated that you've got. How much money will that take? So end of the year, great. So have you got the money to be able to do that?
Currently, we're sitting on about $7 million as per the end of the second quarter, and as a consequence, we have the money to do most of that. Depending, I'm just waiting to see the economics on that right now.
Right. So and that'll be your budget that's left. So you're not your budget. The cash that's left. You're allocating a budget entirely to infill drilling. Is that what you're saying?
We have an existing exploration program underway with 4 rigs, which will continue, and we're looking to augment that with a infill drilling rig that will get us ready for the feasibility that we expect to start in Q1.
Okay, so when will you know how much is being allocated, what your budgets are, and when you're going to need to get out to market to raise?
Well, I'm hoping not to come to market to raise at least until the first quarter, unless we see a substantial appreciation in our share price. If we see an appreciation that the board thinks is of merit, we would consider raising some money in the short term as insurance, and also to bring in things like this program that we're not budgeted. But the reality is that we're not just in need of raising capital right now.
Okay, so just want to back a step. Argentina, you need another year on that before you're in a position where you want to reignite talks that you've been having with potential suitors. So there's no cash coming from that. 7 million in the bank today. It's enough to get you the infill to move more of this inferred into indicated category, which gets you over that 1 million ounce number for M&I. Is that what you hope to be able to bring
exactly.
over?
The PEA accounted for 1,050,000 ounces in the pit, in the mine plan. So basically what we're looking at is we're hoping that we still have funds available to complete the infill drilling to get that 1,050,000 ounces into the indicated category with the cash we have right now.
Right. Okay. So and again, it's sort of a little bit about what you've learned coming into the kind of the junior mining space, because like I say, you're used to much bigger numbers. Do you understand how the market will view you if you're get down to sort of running on fumes level of cash versus perhaps timing it differently?
I do, but again, what's been a real boon is that our production in Argentina has actually been in excess of what we've expected, and so that does have an impact in terms of our overall perspective of budgeting. But I'd say to you, yes, we will not get to with 7 million in cash right now. We're coming into the beginning of September. We've got 4 months to go. We're in a pretty healthy position right now. I'm not worried, and that's why again, if we were to see the share price appreciate to a point that we're comfortable with, we would look to come into the market, but we're not quite there yet.
So I want to be clear. So have you got plans for any money to come out of Argentina in some small form, some small shape?
Has not to date.
Not to date. Any plans?
Not to date. Depending. We would not, again, to your point, we will never run on fumes.
Okay, it's like that. Okay, so end of this year, good. Q1, some decisions to be made. What else should we be looking at? Because so far, you got a producing asset. That's always good. You've got something here which potentially, certainly with an ASIC of $431, 150,000 ounces a year for the first 5 years, it could be really interesting. But let's remember, it's a PEA. It says that this is what it could be. It's what it could be. Next stage, feasibility study, it's what it should be. And then feasibility study, it's what it will be. So you're early days here, in this process, right? So do you think you're in danger of getting the market a little bit too excited by making statements like that?
I don't think so, and I'll tell you why. Two things. One is you'll remember, that largely we've got a team who built a gold company and sold the gold company before. We built the Jacobina mine from a cannibalized situation with Kurt Mencken, who was the mine manager and the general manager for Anglo. So we've done that once before on the gold side. We built Largo from scratch. That was a hole in the ground. We built that. So we know what we're doing, and we know we've got strong experience. Largo and vanadium was a far more complex system and processing facility, et cetera, than what we have. We've got very good mineralization. It's very coarse grained. It's free and liberated from no refractory ore. It's a very simple processing ore to have. On top of that, the manufacturing facility required for this is going to be very, very simple and very, off the shelf. Not a high degree of customization. And then, if we look at the mining of the open pit operations, again, it's very simple. There's nothing complex here. So to your point, a PEA generally, we shouldn't necessarily be singing from the rooftops with a PEA. But I think, we've got 125 million capex. We got 25 million of contingency. The reality here is that I don't think that our feasibility, I'd be very surprised if our feasibility varies significantly from what numbers we have. I still envisage that we could see some great improvement by greater density of drilling. We are working on something else right now that could reduce our cost by a further approximately 10%. So in terms of, we're not doing things in isolation. We are looking at funding right now in terms of project funding. We're looking at a structured funding that may not require any equity and that could get us funded to production. So there's lots of different things that we're doing, and that would be a non-dilutive funding structure. Our hopes are high. Our proof will be in the pudding, but we hope that by the end of the year we'll be able to show something to that effect. So there's lots of things going on at the moment that we're looking to bridge that.
So how do you do that? Non-dilutive, no equity. Given
Well,
what you've got.
I think we have, there are three paths of funding that we see that I see ahead of us. I see a structured funding. I see a potential for royalty or streams, and I see conventional funding, which is your typical 60-40, 70-30 project funding. Now, we built Jacobina, so in Brazil, we built Maracás in Brazil for Largo. We use Itaú, the biggest bank in South America, for Largo. They're very happy. We're the first company to ever pay back a BNDES loan early. The fact is, we're talking to them now. So we have three different routes that we can take, and you quite correctly hit on that first one that we're talking about, which is a structured funding. There are fundings out there for infrastructure and that are different than conventional mining funding. And what we're trying to do is we're trying to use that infrastructure funding for our mine. And it's a different approach. It's an unorthodox approach. We've had so far a pretty good response. And I hope within the next 2 to 3 months, I'll be able to provide some evidence of what we're doing. But even if that doesn't work, we're still looking at on 125 million of capex. I think with the project as strong as we have right now, we should be able to do a 70% debt, 30% equity. I think should not be a significant challenge with the numbers that we're looking at.
Okay, well, that's more. I like that at the end because that's more comforting. Because a lot of companies come on and talk about, we've got alternative financing, we've got structured financing, and those tend to be sort of funky offers from smaller boutique operators who think, don't worry, we'll put some kind of wrap around this thing, it'll be fine. It's usually expensive. Invariably doesn't happen, and because it's just too esoteric. I like the fact that you're confident that you can get some conventional funding done too, but no harm in exploring, right?
We have time, right? We have time, and if this avenue doesn't pan out by the end of the year, then we go to conventional funding.
Brilliant. Okay. Well, I guess I haven't seen you since November. I'd like to see you again before Christmas when you come back on and tell us how you're getting on with all of these things, because you'll be quite close to the point where you're going to make some funding decisions, quite close to actually having brought some of that inferred into the M&I category, and maybe a little bit more line of sight about what's happening down in Argentina too. So appreciate your time today, Mark. Well done.
Well, thank you very much, and always love the questions. Thank you and the engagement. So thank you so much, and good luck to you, and look forward to seeing you soon.